TLDR, ASPU is a deep value microcap stock with huge upside potential if it survives the regulatory scrutiny and enrollment stabilizes. It's easily worth 50 cents to $1 per share, so you could be earning up to 7 times your money. But I would put the risk of the stock going to zero at around 20%. I put a small amount of my portfolio into this stock at an average price of 13 cents. I used limit orders to minimize slippage. My Tiny Stocks Research Substack subscribers received my analysis of ASPU prior to the publishing of this video and may also have taken positions of their own. And now, here's the full analysis. The first question is if this company is a scam or pipe dream. This is the key question to ask all micro-cap stocks. I believe the answer is a resounding no, and that ASPU is indeed a real and legit company. One of the largest shareholders of the company is Leon Cooperman, and funds controlled by him or associated with him. If you don't know who Leon Cooperman is, look him up on your own. He is basically a billionaire and one of the greatest equities investors of all time. I think, although I'm not sure, that Long Focus Capital Management is a major holder. I don't know who they are, but they seem like a legit equities fund with over $1 billion of AUM. Another big shareholder seems to be Richard Strong. If this is the same Richard Strong that founded Strong Capital Management, then his name is associated with scandal in the past. But I don't think this matters so much, as Richard Strong is just an investor. You just want to make sure that the major investors aren't dumb, that they're smart. Richard Strong is definitely smart, even though he may have been tinted with scandal in the past. Another major shareholder seems to be Brett Cohen of JGB, another legit player in finance. So in all, this definitely seems like a smart money operation. Now, I do speculate that most of these investors are down on their money, meaning their cost of ownership is higher than what this stock is trading at. So this investment hasn't worked out for them in a sense. Or maybe they were previously debt holders who converted to equity. I'm not 100% sure on the history, but the point I'm making here is that this isn't some sort of scam company or penny stock scam, in my opinion. Or my opinion is that this is a legit smart money operation that underperformed and went sideways, but a legit operation, nevertheless. The other signs it's a legit operation is that it has $33 million of TTM revenue, and it also has about 180 full-time employees and about 470 adjunct professors. And by the way, as far as what this company does, it's a for-profit college, similar to, let's say, DeVry and University of Phoenix. If I'm reading their materials correctly, I think they have over 5,000 enrolled students. Their CEO has been with the company since 2012, CFO since 2021. However, Chief Academic Officer, who has been with the company since 2014, resigned. I don't think the company announced a replacement. This is a bit concerning. I would like to know why she resigned, how important her role is, and why she hasn't been replaced. The last point I want to make is that due to the fact that the company is a for-profit university, revenue is hard to fake. In other words, revenue is highly likely to be real. This is because the for-profit education industry is highly regulated, and revenue often comes from student loans, which often comes from the government and have stringent reporting and other regulatory requirements. Due to the government essentially having eyes on this issue, it's highly likely that the revenue of ASPU is real. So all in all, my opinion is that this definitely isn't a scam operation or a pipe dream operation. I think ASPU is a legit enterprise. The second key question is if ASPU will survive and normalize its operations, revenues, and cash flow generation. The answer to this is much trickier. That is, if I were forced to guess the answer, I would probably put the chances of normalization and survival at around 80%. To answer this question of survival and normalization, there are two key factors when it comes to for-profit universities. Let's first tackle the easier one. It's the question of enrollment and whether enrollment is going to fall off the cliff. From 2024 to 2025, enrollment fell 24%. The company explained that it cut marketing due to corporate restructuring and other reasons, and that the company plans to resume marketing and recover in enrollment. So this seems somewhat plausible. Enrollment did increase year on year in Q1 2026, so their story is holding up. But overall, enrollment is a bit shaky, but I think it's plausible that the company will be fine in this area going forward. The second key factor to a for-profit education company's survival and normalization is its regulatory status. So this is a harder area to offer, my opinion, because it's complicated and also because you just don't know. Overall, when a company is already in regulatory crosshairs and is already entangled with regulators in a highly regulated industry, as is the case with ASPU, it's hard to predict what's going to happen. In reading their disclosure, it basically looks like ASPU was hit with various regulatory issues in 2022 and 2023. Included in its regulatory troubles are the surrendering of its BSN pre-licensure program. ASPU was also subject to a stipulated agreement, a program review, a show cause directive, and heightened cash monitoring. It seems these regulatory concerns are mostly getting better or resolved, or at least not getting worse as of late 2025. But really, I honestly don't know what's going to happen on the regulatory front. Remember, for ASPU, there is always the very real binary risk that it's going to be basically shut down by regulators for no reason. So given all of my analysis about ASPU, what do I think about its valuation? How do I plan to invest and hopefully profit in ASPU? Well, the publicly traded comps for ASPU include APEI, ATGE, LOPE, and STCRA. Their enterprise value to revenue multiple is generally well above 1x. For ASPU, I'm going to apply a slightly lower multiple of 0.75x to account for its small size and recent scandals. ASPU has LTM revenue of $33 million, which implies an enterprise value of about $25 million with this 0.75x multiple. It has long-term debt of $7 million. I'm going to ignore cash on balance sheet for now, just to be conservative, even though cash is usually included in an enterprise value calculation. I'm also going to add about $1 million due to various warrants, preferred equity, and other potential dilutive sources to common equity. This leaves you with equity value of $17 million, which is currently about 55 cents per share. However, I believe there are various equity dilution features at 50 cents per share. As such, given the current information I have, I think a very conservative selling point might be around 40 cents per share. Long term, I could easily see this stock trading over $1 per share as the company stabilizes and puts its regulatory woes behind it. In terms of risk versus reward, recall that I guessed the probability of this stock going to $0 around 20%. I think the probability of it going to 55 cents or even $1 is around 80%. Using these assumptions, the expected value of the stock is about 40 cents to 80 cents. As of December 8th, 2025, ASPU is trading around 15 cents. I bought some of these stocks at an average price of 13 cents, and I'm looking to buy more if the opportunity presents itself. When buying, I used limit orders, not market orders, as OTC stocks can be illiquid, and I wanted to avoid getting bad fills. My holding period for this, essentially forever. Either it goes to $0 or I make multiples of my initial investment. And I first publish all my ideas on Substack, where I also give updated valuation reports and moves. It's at Tiny Stock Research, and the link is in the description.